Hi guys, I'm Dion Gomez. Overlooking an options volatility is one of the biggest mistakes investors make when it comes to options trading. And in this video, I'll show you how to analyze an options volatility to ensure a profitable transaction. Now, volatility charts can be found in iVolatility right here, where you can join for free. Also, you can find volatility charts in optionsexpress.com. Also here in Options Express at optionsexpress.com, you can open a free account without having to fund it, and you will be able to use the volatility charts we're going to be seeing. Now, the important thing to know about volatility is that when volatility is high, options tend to sell at a premium, and when low, options tend to sell at a discount. Therefore, options must be purchased when implied volatility is low. Now, this is very important because otherwise we are going to be purchasing options when they're expensive and selling when they're cheap, and that's not a very good deal. There are two kinds of volatilities. There's the historical volatility and the implied volatility. Now, this one is the one we're going to be using. It's represented by a blue line in the charts we're going to be seeing right now. Here we are in the volatility view in Options Express. As you can see, we have two charts, the 12-month chart and the 3-month chart. The only one I use is the 12-month chart. Now, as I told you, there are two kinds of volatilities. That's the historical volatility, which is the red line, and the blue line, which is the implied volatility. The one I always use, it's the implied volatility. Right here, it's a blue line. Now, the charts might be a different color, but always look for the implied volatility. Now, what I said here, it's kind of a traffic light system. I look for the highest point in the last year. Right here would be 110, and the lowest point for the year of the implied volatility, and it would be around here, maybe 32, 33, something like that. And what I said is a traffic light system. In this case, the first third would be the green light around here. Okay, that means that if the volatility charts in the first third in the green light, the volatility is very low compared to where it's been all year round. So I always purchase options when they're in the green light, because that assures me that worst thing can happen is the volatility going up, and that will increase the value of the option. The second third, or the second zone, would be the yellow light right here, and that's a cautious light. That's up to you, purchasing it or not. And definitely where you don't want to purchase an option is the last third, which is the red zone, when the volatility is the highest. I never purchase an option when the volatility is highest, because if it drops, it will certainly drop in value. Now, if you always look for this when you purchase an option, you will make sure you always get a profitable transaction regarding the volatility. Thank you very much.